to you guys as like probably gonna be off the next few days. But yeah, just wishing each other some good holidays, uh, chilling, having going through these concepts, So we will. So you have some homeworks to do in your holidays if you are gonna have some free time in it. I suggest taking those days for your families. You don't need to always be on the screens. Also, like usually Christmas period is really slow. Market is still decent for now. I mean, it's not moving much on Bitcoin, but compared to the last year, this year it's been like crazy good. you know. Um, but still take this time for yourself, for your family, and because 224, guys, I don't know if you're ready for it. Like 224 is gonna be massive. So you wanna take these days, to recharge a bit, and trust me, because on 224, man, you're not gonna have much time to rest. So take this time, feel maybe you can learn something, but trust me, take off your minds from the charts. Maybe learn, concepts, but I suggest not trading in these days. Enjoy the time with your family. Okay, let's go through quick, really, really super quick market update. Um, Super quick, yeah. I don't want to go. I don't want to make this live about this, so just a quick heads up, just to have a look together to the market, but really not much to say. So market being pretty stable lately. It's actually consolidating under our major resistance level. Uh, doesn't look like he honestly wants to do much. Like, to be honest, if I'm frankly honest, it might stay like maximum in this range here over next 4 days. Maybe touch 43K, but I expect it to stay in this area right here. I don't expect much movement happening. So wanna see like this bounces through here. Might have some movement for altcoins and Ethereum, but mainly what we are looking for now is probably gonna be ranging environment till the 27th. So it's probably gonna be really stable, chilling. Always been like that. So expect like this range 44.5, 43,000, the Christmas range. We have been calling for this range forming since like when we were here, that we said about our ranging, that was really possible to have a ranging environment. And this was it. This is actually the range we got. Better visualization is on this other chart. You know, this is like, and we're gonna see like how, today in the live, we're gonna see how we managed to find out this range, how we identify it, how we got it, like we got this idea right straight away. Like since we went to this area, we actually like immediately find out that this was gonna be a range. So you're gonna be able to do it too if you're gonna pay attention to the live. But yeah, I mean, like this is pretty straightforward. Probably as I said, gonna range there. So not much gonna happen. On the other hand, Ethereum was perfect, man. We got this limit, a few days ago. We got the outperformance we were looking for. Hopefully, we get to these 30p over the Christmas weekend. On my side, it's a trade that's up like more than 8.5%. So in my eyes, this is just, pretty much done position. I just let it ride. If it has to get stop break even, let it be, but we are sitting in a really comfortable situation. Like, I think if we ever have to test back our entry, then possibly the outperformance will be invalidated. So for me, it's a free risk running trade that I have no problems keeping open while even not checking the markets, the next few days. So Solana was actually massive. Solana was massive. We got this trade with a limit, and like this is being up only since then. To be honest, I think like this could top out even at 143, not gonna lie. So I think this is really possible to test till up here. Or maybe, more reasonable target, maybe 115. I think 115 is really possible for Solana. But even this trade, I'm out 75%. I'm probably gonna take TP either here at about 115 or up here on 140. But I mean, it's a free risk trade. Just let it go. So we just went through the open position we had. Now we can go through our ranging educational content. So, all right. Oh, we got a guest as well in the house. Hello, Pocky, man.
Hey, what's up, Rez? What's going on, my brother?
Doing good, bro. I'm a bit hangover from yesterday, not gonna lie. But had to take some caffeine at the end. Wanted to say good holidays to the boys and give them some homeworks for the holidays.
Yeah, man, I'm ready. I'm ready to enjoy. I'm definitely ready to enjoy the holiday season. That's for sure.
Mm. Well, take like at least those 4 days, completely off. It's been like I think this first Christmas I'm doing since the last 5 years with my mom and grandma. So really want to take advantage of this year.
Yeah, just a few days for me. I remember last year I was trading on New Year's, making a whole bunch of noise in WG. I'm gonna try to do it again this time.
Do some drunk live streaming.
Yeah. We could do that too.
Oh man, right now if I see a fucking glass of wine, I'm gonna puke right now. But yeah, man, let's start off with our lesson today. So the boys gonna have some homeworks. So usually, let's start off with where can you find a range. So usually a range could be found at about a resistance level or support level. Okay, so let's drop our two invisible lines. So this could be a support, this could be a resistance. So usually ranging happens after an impulsive move. So let's start off to the downside, yeah? So let's imagine here we got big downside, okay? And this was our impulsive move. Usually, no, like every time, market not gonna move in a straight line. So usually you're gonna have for sure some periods of accumulation or distribution, okay? So after impulsive move, you can expect at any point a range to happen. Usually the main ranges, the longest ranges happens at like really key levels on a chart, right? That could be like BTC 45K. It was at 30K on before the break. So all those levels were actually like main key levels, and that's where the longest ranges can form, and you can expect those to form. But usually after an impulsive move, market needs to recharge to gain liquidity for before the next move. So usually what you see is big impulsive move into a key level. Okay. Here, usually what I do to find out a possible um, possible range forming is a first break of structure. So you imagine you're here at your key level, maybe you deviate below, and then you make this structure here. Okay? This could be the sign of our first indication of a ranging environment. Why? Because this is a sign of this impulsive move cooling off. Usually cooling impulsive moves, you don't have those type of break of structures. You usually have just like, let's say in this case, in the downside, you always have lower highs and lower lows consecutively, right? The faster they go, the longer they're gonna be, the farther away they're gonna be. Okay, so when you start seeing a structure like this forming, okay, so break a structure, that means that impulsive move could be over. So usually it's really hard that, like, from this thing, like from this, it just goes back up here. Okay, so you imagine you need some accumulation here for the next move to happen. Okay, so how do you do that? So first of all, you want to gather informations. So that's where the typical have patience say that we say a lot in corners gets into place after a big move, because you want to understand what could be your range high and your range low. Usually when you get like this information is because you got first this breaker structure that indicates the finish of this impulsive move. Then you got the first information about when the first wing eye is going to be formed. Okay, so let's say from here, then we got the first drop. Perfect. This is your range high. Okay, this could be your range high. After that, you're gonna have the next movement. Okay, maybe it could be impulsive, more impulsive, and that's gonna be your range low. Okay, so this is your information from point on, because you got this was the sign of the first stop of impulsive move. Here with the move up, you're gonna have your range high. So the first wing after this information is gonna be your point of interest. So in this case, we got this as range high, and this, the next wing low, as range low. So from there, wait. From there, you're gonna have your first range. Okay. So range high, range low. Perfect. So now that you got this information, which time frame do you look for the range? It depends on different factors. That could be usually like the higher the time frame, the best your confluence gonna be. So if you have a range on the 4 hour, it's gonna be more valuable than a range on the 5 minute time frame, for example. So usually what I do, for example, is looking between the 1 hour time frame to the 4 hour time frame. Usually that's what I look for a valid safe range on my highs, you know. Yes, to see the trend, to gather this information, to have an understanding if we are forming this range, if we are keep going, when I have this first signal, then that's usually where I look for, like the time frame is about like the 1 hour to the 4 hour time frame. Gonna grab some lunch and take a couple of shots. All right, man. Enjoy your shots and your lunch.
I didn't want to interrupt you, brother, but I see that
Don't worry, man.
you're doing some teaching and stuff. If you want to get any live trades in, hit me up, man. I'll come back.
All right, for sure, man.
All right.
Enjoy your time.
Hey, thanks, bro. You too. Later, everybody.
See you. So usually, once you have this information, you're already gonna have like really good, really need like some, how do you say, advantage over the rest of the market, right? Then we're gonna actually see this in chart, like for example, how we find out about this range trading in our BTC current market, right? But you simply have range high, range low, okay? So these are your main levels. So what I mean is, are you gonna just place your limit here every time? No. Like you place, I don't know, you wanna short here and buy here, trade up? No, not really. That's actually where your price action understanding comes in play. Usually you have different ways price reacts to the range high and range low. I'm gonna show you the easiest ways to do so. So to understand when it's a good trade to go through in range high and range low. So what you're looking for in this case. So we start from the easiest one. Okay, this is the easiest one, and I'm gonna explain you why. So we go here, we stay above. Okay, so you think it's a range break, and then you lose the level. Okay, so you have this next. This one is called deviation. Okay, this is the most viable and the best type of trading you can do on range trading, because this could be like, this is easiest way, more reliable, and the highest we ratio, because this is where most of, let's say, the noobs get trapped, right? But you're ahead of it. So here, this is your deviation right here. You get above your range high. Usually it looks like this. You get above the level like this. You get above, okay? You might retest it, and then you fail to make a new high. So you make lower high. Usually, this is a big sign of deviation. You get like above your level, okay? You retest the level, and then you make a lower high. That's the highest percentage we rate on this strategy. And trust me, you're gonna see this a lot, having this lower high type of trade. Where do you want to enter your trade? Once you get back into the level, retest the level, that's your entry. This is your entry with stop above the last high that we made. Why? Because if we do get back above here, like if you go back here and break the highs, this is possible that it continues higher. Okay. But if you get rejection here and don't break this high, this is the easiest strategy you can do. Easiest. Because you have a nice entry target. Also, you have a perfect invalidation because you're right at the top of the range. And also, you have structure confirmation. You have really good invalidation, because then if price breaks back above it and take those highs, that means it's going to probably push higher, right? But we will see how that looks after, okay? Yes, I will. I will. Don't worry, man. Now I wanted just to go through theory, right? I go through theory, and then we will go to see some of this price action in chart. Yeah. So here how you trade it. This is the best way to do it. Like go here, they make the deviation, get back into the range, reject with like you make lower high, you enter at the retest of this range high. The range high we made was taken by the first wing that we said before. So first wing is your range high, swing low, the first swing low, that's your range low. You simply short this retest and you target range low. That's the easiest and fastest way to actually trade this part of the range, right? Like since then, you can still expect like some scam movement, maybe get back up over here, but then at some point, eventually, you're gonna get to the low range, right? So this usually at about two swings in the range, this gives full confirmation of the range. Here you already kind of know this is a range, but once you get like two touches from each sides, that means it's basically like certain this is a trade now. So we can do like the same thing. Let's say we get deviation here as well. Uh, Deviation, then we make like this, and then we get back above it. So we can do the same thing here. Where is, yeah. And this could be your first way to identify the range, okay? The 0.5 zoning range is important. Yes, it's kind of important, but in the ranges, the zero point 0.5 area is usually really choppy and really confusing. Like it's 0.5 range, it's usually like for real a 50-50 chance. Because like you either like if you have range high, range low, you're at the top extreme of the ranges. So that means you actually clearly have an entry with a possible good target. If you are at mid range, it's kind of tricky though, because like let's move this level like here to say it's mid range, okay? So for example, here let's try to build a trade, right? Ta-ta-ta. We short this, we target the stop losses up there, and we target this. This is your short trade. You have your stop bill above this high we made, and we target the bottom range, okay? Same thing here, on the opposite, we target, we entry here on the retest of the range, same exact thing that we did on the downside, we do it on the upside, and we target top range. This could be, your top bottom range. But let's say we keep moving, okay? And we are here. We are at 0.5 range. This could go either way, man. Because, like, first of all, how would you build your trade? Like, if you want to take a long, you kind of want to, what do you want to do? Do this and then target here, This is not good trade, right? And same thing, still, like even if we lose this level, then reclaim this level and then push to higher. But maybe you were short because you saw that losing, you know, you really don't wanna. This side is tricky though. Like usually, it's not what you're looking for. The risk reward is not there, and it's so much better to have like patience and wait for those levels to be tagged. You know, instead of risking and trading this side. Because first of all, imagine you go here, you say like, oh, I think this level is gonna hold. So you put your, let's say you put this trade like this, you open, right? Let's say you just put this trade saying I think this level holds. Okay. So imagine like he goes here, he gets you stopped, and then push higher and gets your TP. This is usually what happens because like maybe it deviates, and then goes back above. But did your trade got invalidated? No, because you were in the middle of nowhere, you got deviation, you really didn't have enough confidence to go and take a position there. While here, you have a really good reason to go long because if I get stopped, it means that I lost range low again. I lost it again, and then I make lower low again. So this means this could potentially be the range break you're looking for. Okay, this could be potentially the range break you're looking for. So in this case, your invalidation makes sense because if the price instead of going back up here goes down here, takes the low and keeps going lower, that's invalidated because this invalidates literally all of this, like not invalidates, but confirms a range break of all this price action right here, right? While here, you're just basically confirming this, right? I don't know if that makes sense to you guys. Does it? Good. You know, I mean, you could still technically take a trade here uh, if you want. You know, maybe right here, instead of risking, let's say you usually risk 1,000 euro, when you take this trade, you risk 300. You know, you might have your confluences, your strategy that tells you, yes, you want to take it, but for sure, man, you don't want to go risk on here. Like, for sure not. Like if you really have like I don't know, you see like imagine this is BTC, okay, and you see like BTC at mid range, and you see a coin like I don't know Solana that looks fantastic, okay, you're like, okay, fuck it, I might take it. Like it makes sense. This could be a zero point 0.5 of the range that could hold, and that could send Solana higher. That could make sense. I mean, I'm not gonna just say like never do this, you know. But you know, if you do this, maybe you risk less, you know, uh, for this reason, right? Because these mid-range invalidations are not as good as top range or bottom range. Okay. Like you have better situations, better like if you're just patient enough, you know, you can just take those entries at top and at the bottom range and let them ride till top range. You know, let's say you get this entry at bottom range, you ride the till here, you know, chilling, and then when you're looking for shorts, and then you write those down, you know. So that doesn't mean you're not in a position. That does mean you're still holding your positions from a better perfect entry, you know. That's your best entry in a range. You know, then after this we will still go, you know, through like actual chart trading. But first I wanted to show you some everyone drop thank you, man, I appreciate it. You know, I try my best, you know, because I'm not English native speaker, but I hope, you know, you guys can understand me well. Okay, good, man. Love it. Thanks, guys. I appreciate the support as always. You know, I was kind of missing doing those live like explanation and learning. So next year, man, I'm gonna focus on this a lot, and we will go through a lot of concepts. So let's go through another possible way to enter your top bottom range environment, right? So we saw deviations, okay. Right now, what you want to look for, another way or another thing you could look for is whips, okay. So the sweeps, you probably already see them, like a lot of corners already shared SFPs, right? So basically liquidity taken, okay. Usually those happens with when you have like a big wick, all right. So let's say you have a candle, you have a big wick above. Usually that's your liquidity target. So in this case, let's take this as an example. Okay. Usually when I have those highs, maybe right here you even end up weak on top. Usually I usually like to track those levels, right? Mark those levels up. Okay. So I like to market. This is my level right here. Okay. So we are at top range. Okay. So right here, I'm already looking for reasons to get short. Okay. So we got this movement. We got our long bottom position. We took profit on the top. Right here, I'm looking for reasons to get short. So what could happen here? How those usually happens? Usually how those happens is that they push maybe lower and then they do a quick wick on the upside. They take they take this liquidity on top. Okay, that's your stop losses because that's why I tell you you always want to have confluences before getting short or bottom top range. Like you just don't like as I said at the beginning, you just don't short blindly the level at top range and long blindly the level at bottom range. You want to look for confluence because if you just blinded short at this level, then maybe your stop where would it been up here, right? And then you see like they take your liquidity, then you think that market sucks because they it's manipulated, and then it goes down. Okay, and you're gonna be angry, right? You're gonna be angry. You're gonna be like, fuck man, I got stopped at the top. Market makers are bad people. No, it's you that you did wrong. So so in this case, what you're looking for is look for this high that we made before to be taken. So we take the liquidity, okay? Your confirmation usually is candle close below this level, and you make maybe another swing low here, make lower high, maybe even rejecting at the SFP level. So this level right here, you see this a lot, man. Like this main key level of the SFP is usually like a really good bearish retest entry you can get on those SFPs entry. So what you see here is liquidity taken lower high into the SFP level. That could be your entry. In that case, your entry is here and your stop is above the high that we made. And you target here. So this could be one trade, but if you really want to be like so sure, oh fuck. So let's say you really want to play it safe, okay? You can entry here as well. Look, you have this, and then you can enter here. You can enter there with stops simply like close to the level, like maybe I don't know, maybe up here, okay? And you target always his. So you have two possible ways to enter. You have this first that is more aggressive, better return, right? Or you have this where you have the SFP and then you have the confirmation once the price got back into the range. Okay. Range high, the level is the same, the level that we took way back when we got our first swings. Okay. So this is your level you're looking for. This is the always going to be the level, the main key confirmation you're always going to have. So you can take your first aggressive short entry here, okay? But if you're not sure, you want to stay safer, you take the lower entry area here and you target bottom range. As simple as that. Simply every time once this move happen, usually you don't want to see just price to like this and go back above here. This could be like sign of strength. So that means that a range is gonna break out. And so you really don't want to be into that short anymore if that happens. Really, like even looking at the structure here, just by highs to jump into your highs, that could be strength, right? But like still we are like if we stay below it, like even if we go here then and make a lower high or take another SFP here, then you still have like confidence to go here at least mid range, okay? So this is the same, and we could see it exactly the same at bottom range, right? We could see the same thing. You go here, you had that last swing low, maybe with a nice big wick, right? So then you do this, you take the liquidity, maybe do the same thing, Here you could enter already with the stop below here, but then you have the best confirmation when you get back in below inside the range. Okay, you get back below inside the range, you look for entry, stop loss here, and it's the same exact thing, man. Is this recorded? I'm not recording it, but I see some mods in here, man. Hopefully someone did. Well, if not, man, I'm gonna do another video after and save it maybe on YouTube. But yeah, do we see the deviation for the long liquidity? The deviation here, as I explained before, you want to kind of see like the price reclaim the range low, range high. As we see here now, we were looking for SFPs or liquidity taken. So you look for those are already like two confluences you could have here at different type of like different ways to enter this type of ranging, right? Like here we saw possible short entry using a deviation. Here we saw the same thing but for the long side. Here we saw possible entry short on top range with using SFPs or taking liquidity. Here we saw the same thing, taking liquidity for the downside, right? So yes, exactly, man. Right now, I just wanted to just give you the technicals, right? Um, and like I want to first explain you the possibilities and then show you on the charts. So so let's go through the questions real quick. Yeah, where do you see the liquidity areas? So the liquidity areas, you usually see those with the big wicks. So if you have a candle that's being like a big wick or some major like swing high that then didn't get taken for a while, like important swing high, that's usually like a really good key level. But it's by itself, any swing point could be a liquidity target, okay? But the best, if you the bigger the candle is on the upside wick, the better is gonna be the liquidity target, because usually you see it this way. Like a lot of people uses those points as their invalidation, right? They see a big wick, they say, okay, perfect. I put my stop loss under the low. So you kind of have those as liquidity points because people uses those as invalidations. That's literally liquidity points, man. You gotta understand, like liquidity is literally people that have like their top losses there, they have their buy orders there. Those are liquidity points because there is liquidity, there is orders. Yeah. Is this good or it's bit? Yes, I mean, as I said, the bigger the candle is gonna be, the better. Like I prefer a lot better the candle you see on the top, the second circle you made in order. That's I think the best because then you see like big wick and then the candle closing red. Usually for me that's a good level to look for SFP. But I think I will go through maybe more in details on SSP in another live. I'm finding out there is actually a lot to say about those. So I think we can actually go deeper into this concept, maybe in a different live in liquidity targets. But yeah, if you have minimal knowledge, For me, those could be the best options. Also, you could have another way, and the last way, I usually can gather my entry at top bottom range, is this. So you go top range, simple, the best way possible. You go here, you break the structure, and you make the lower high. This could be another entry type. So this is using price action. So you literally have your uptrend. So the uptrend is made of higher highs and higher lows. And then at some point, maybe right under top range, you have a breakout structure. So you have like maybe even little deviation above, then break the low, and here make lower high. This is your entry. We stop above the high. So this is using market structure concepts. This is the third and last way I can gather entries on range. Also, I don't know when the encyclopedia gonna come out, but I made my article is about this concept on market structure. But I can talk I talk about this a lot as well on my corner. You can see a lot of material about this concept because it's one of the main ones I use and the most profitable I have. So usually look for this structure to happen right at range high or range low. So you have this, make maybe here you have demand or you have a breaker, and that's your other long entry. This could be done both sides, both directions, you know. So here I gave you guys three different ways to look for like confluences you can have at range. So what you want to look for in price action to happen when you are at bottom range or top range. So we have three different ways we saw tonight. We saw deviations, we saw SFPs, and we saw market structure breaks. That's three ways you can find yourself an entry at top and bottom range. Don't make like one thing that is massive on ranges and what's gonna make you ahead of everyone early on is first of all understanding as fast as you can this is a range. Second, why? Because once you understand it, you're always gonna be looking instead of trying to long every breakout to the upside or short every breakout to the downside. And people, because people are looking that, like people always want a trending market, and they get wrecked in ranges because they keep shorting bottom range and keep longing top range, okay? Because they see maybe, they can see maybe like, I don't know, price being strong. Because usually, when you see this, like this upside, for example, this in your eyes could look strong, you know? This could look strong in your eyes because maybe you have like some good movements and good volumes. So in your eyes, you're like, fuck, man, looks really strong. This is gonna break out the top range. No, man. Like out of this, you could have taken like, sorry guys, mic disconnected. We're back. So just out of this, like you could have made like six trades, even more in the middle, right? And like let's say from here you try another long or short at top range, bottom range, and then it breaks out, then you lose that one trade, and then maybe you even long the breakout, right? But like all these times, instead of looking shorts here and looking longs here, you were looking for reasons to get long with actual technical reasons for it, right? So that's really gonna give you really a big advantage over anyone else. You have three different things you can look for. You can look for deviations here, as we saw. You can look for SFP that we saw here, and you can look for market structure breaks as we saw here. So you literally have three ways of having a confirmation at top range or bottom range. Literally, three ways of doing so. So do you have any other question about this? How does this feel? Like this? Does this look super hard for you? Does this make sense? Do you like this type of strategy or way you look these things? So, yes, man. We use this every time here. All this week, as we are back in a ranging environment, we use these concepts all week. So here, let's like even go through every every beat we went through this this week. Okay, so what we got here? We got macro level on BTC. This could be our first stop for our push up. So what we have here? We have an impulsive move, right? We have impulsive move under key level, and then under the key level, we got our breakout structure. Okay, so here was the first sign of us possibly ranging. Okay, this was the first sign right here. So what we got here? We got the first breakout structure, the first change that tells me, okay, the impulsive move is over. Now this starts the ranging. So breakout structure. Now let's look for our swing slow. Usually you can use your macro levels as bottom range and top range. In this case, that's how I did it. Usually, like they even were perfectly marked up as being like even a mid range that was working really nicely. Okay. Here, for example, I had this macro level that was really close to the swing low. So from then, I always use this level as my bottom range because this was already a macro level by itself. So that's what I was using. But we had like, so this macro level that I already drawn, that was already there. That could be our top range. We get the breakout structure. That's your main thing that's saying you, all right, bro, market change is not impulsive anymore. Here we could range. Okay. So here, what we got? Big drop. So what I told you before, guys, that the biggest the candle, the better it's gonna be for the entry on SFP. All right. The biggest the drop, the biggest the candle, the more impact that the candle has, the best this level could have been. So let's use our replay mode as well. Oh my God. Yeah. I still need to change to Apple. I can't. I cannot change from my Apple store to paying with card. So I think I might have to make another account. Okay, never mind. We still can work with that. So we mark this level. This is our SFP level. That's where a lot of stops are. We have like this first movement. Okay. And boom, that's what you got. Big candle wick. You have this. SFP, as we saw before, okay? Here, you could have entered in different ways. So you could have entered right on the sweep, okay? You could have entered right on the reclaim of the level, okay? You could have entered at the retest of this level. So you had a lot of ways you could look for to entry here. Like if you took this first, and we did. So when I saw this sweep, I actually longed here because I had multiple confirmation even on the lower time frames. Because here I actually entered, okay, and we got some nice odds trading for this because we took the liquidity and we break structure on the minor time frame after the sweep. So for me, that was good enough reason to enter the long, okay. So we took this, we wrote this, it was mid-range, TP1. Here we got the same. We had like this, we made higher low. So we all of those lows, yeah, we never took this liquidity again. So here you could take a position anywhere with your stop below this low and target up here at the top range. And that's exactly what we did. So it took longer, of course. Here, of course, then you have like some other levels that comes in the way, whatever. But if you take this range trading in a way where like mid range, always you take some profit off, right? You could have like test bottom range like 3 times before maybe going back to top range, like we did here. But mid range, always take profit. Here we retested again once we wrote those, we actually went in this trade. We I think we took AVAX, even BTC on the in this trade after this sweep and the lower high here that never took with like the invalidation under this low, and we took profits here. Then we stopped break even here, and then we also had this was the last thing we saw. So this was entering a bottom range with market structure concept. So we tagged our support, okay? We tag the support, we break the structure here, and here we longed. Of course, we took some profits here at mid range. We took some profits, and then boom, we break them up, and we went. Now we are at top range once again. Right here, we saw already like SFP of this. We saw a deviation happening with retest. We saw a I don't know what happened. It just died me. Can you hear me, guys? Okay. I don't know. My Discord crashed. Mm. So just in this, we saw SFP entry, deviation entry, break of structure entry, all the 3 ways of looking for confluences at bottom range worked in this range, and now we are right back above. Fuck, man. That's right. If I crash, then the screen is gone as well. Perfect. Yeah, here we go. So SFP. Here we saw the deviation. Here we saw the break of structure. We saw everything we saw in before in theory. We saw those here. You look for those confluences every time you are at a certain point of the range. You look for those. You want to see like the how the price behaves for that. The important thing in all of this is the fact that you're actually looking for a reason to get long at bottom range instead of, let's say, look for reasons to go short. Here you're looking for reasons to go long. And you actually had a lot of triggers happening there that was telling you, go long here, right? So right now, what I see here, first of all, we are at top range, right? We are at top range. We could have this playing in different ways. We have this week that's a really good target of liquidity, really good target. Okay. So what could be what we could have here? First of all, it could like if we get, let's say, a drop here, okay, we break the structure and then we make a lower high here without taking this. This is a break of structure. This could be your first reason to get short. This is what you could be looking for. The first break of structure, take these lows, maybe even consolidate a bit here, make a lower high. That's your entry. Also, what you could have here. So as we marked before, we have this liquidity target up there. So you might see an SFP. So let's say like from here, you have a big impulsive candle, takes the liquidity here, goes back in. This could be your first reason to get short. That's SFP, right? So you're looking for those reasons to get short, right? Also, you could have a more like this could that's what tricks the most of the people, and usually those are the ways that prices moves the fastest after the confirmation. So let's say we go back up here and we start consolidating, right? So after this, yes, if you have like this kind of consolidation and then breaks higher, okay, this is bullish, and then you don't look for shorts anymore, okay? But and usually, really, those like you're gonna find out that those always when this happens, they're never far away from the level. They're usually just right above it, usually. So then, if you see something like this, and then this breaks and gets back below, what happened? And gets back below, okay, and retest. This is your short entry, and this is a deviation right here. So I know it's a lot of information, okay, but you in front of your eyes, you have everything that could happen right here. So at the top range, your main focus is to actually find reasons to do what you want to do. So as you are at top range, you might be looking for shorts, right? For reasons to get short. You have three ways, and we saw it. So we saw a possible break of structure scenario. We saw a possible deviation situation. We saw a possible SFP situation. We saw three different ways of this going, like giving the target, giving the signal for us to go short. Also, all those scenarios, right, have really, really easy validations. Really easy validation, big profit, nice R, and you saw three different ways that could happen. Like you basically have all the possibilities, all the scenarios that could happen in front of your eyes. So you have here, make lower high, break the structure, make good, and then lower. That is your first. Then you have the SFP, quick liquidity sweep back below, and this is your other one. Then you have this one where you range back here and then gap below. This is your deviation. Or you have the bullish case. That means then after that we would be out for the range. You get above here. You make this little range here. Those usually really don't last much, not even a day. And then you have the break back above, retest, and higher, and you break every high. So you have four different scenarios you want to look for. So you literally have in your minds anything that could happen here in front of your eyes. Also, in all of those scenarios, you won't have like always have a confirmation, man. You don't blindly short or long the level, but you have everything that could happen in your hands. So you won't arrive at a situation unprepared. You will be there and be ready for anything that the market could give you. Okay. But that's exactly what you look for. You look for one of those three happening, or you look for breakout from it and continuation. As simple as that. Mm. Take some water, man. Took a lot. Do you mind explain, but man, if I have to explain boss, that's another live. It's really like that would take a lot. But if you open my corner, go to pinned messages, then you will see I have a lot of material about it. A lot, a lot. So you have a ton to read. Hey guys, I went through everything, I think. So if you have any question um, about what we explained, that's your moment. Man, the thing on daily is the same, exactly the same, because it's simply that it takes longer to play out. Right now, I wanted to give you an example. Like this has the same value on any time frame. Okay, just simply the daily things just takes longer to play out. Like maybe to go from bottom range to top range, you might need weeks, months, but the concepts are always the same. Also, you always want to kind of zoom in, right? How can we identify the most scenario on the table that will happen? Um, the most scenario, as I said, uh, those are the ways you can see it. You should always take those into consideration. Okay. Once you have the knowledge of those three happening, those are the main ones, and also the more consistent. You don't really need a more often ones. It all depends on how the swing's looking, how everything looks in your perspective, what the market wants to do. There is not a more probable structure that could take place. You just want to act based on what the market tells you. And that's why a lot of times we preach patience at key levels, right? You want your one of those triggers to be triggered for you to go. If you don't, then better not take a trade than don't. Then take it and lose it, right? You wait for one of those, like I gave you four possible ways of you for take a trade here. And that's, trust me, you're gonna have enough for it. Which are the best time frames to use when analyzing? As I said, the higher the time frame, the best. If you have a 4 hour breakout structure, if you have nice 4 hour SFP, that's better than a 5 minute one. So you can always use like a 5 minute to have extra confirmation, but the higher the time frame, the more reliable overall. Use moving averages? No, not at all. For scalp trade, higher time frame to lower time frame for confirmation. Just oh no, I have both, man. I look for everything. Lower time frame, higher time frame. Like you just line up your confluences, right? Like the more confluences you have in your system, the higher the probability the trade is gonna play out. As simple as that. Like you really don't need as much, once you understand those concepts, like even going through like 4, 5 different time frames to confirm your trade is not gonna take you long. Pepe. Okay, we can have a quick look on Pepe. Yeah, I mean, this never ranged, but this looks good because like we had this big accumulation on this falling channel. We had deviation, and you would have taken a long year on the reclaim. Maybe if we go, no, never did. So maybe here, based on our deviation concept that we just saw, you look for this. So you have this breakout retest here. So you have this is deviation, like you have mini range, deviation, breakout back above. Then you could have a retest of this, and that's your long. Oh, guys, did you like this educational live? I hope it was helpful. Also, if you next days, weeks, you're gonna have some questions, you know, you can tag me in chart ideas, you can share me your range, you can share me your thoughts about your range, right? And I can help you out through that for sure, because like the best, hearing me talking is a lot easier than actually doing it. So if you need any questions, just tag me up in chart ideas with your charts and we'll go through it. But yeah, guys, thank you a lot for joining in, and I wish you guys beautiful holidays and to pass some beautiful time with your family and loved ones. And yeah, guys, have a good one.